All right, what's up, daily market narrative viewers? We've got the S&P 500 futures dipping a hair, down 0.10% last I checked at 10 p.m. Eastern Time. But the mainstream is telling you everything is sunshine and rainbows. Today, we're cutting through that noise and getting to the real story. Are we on the verge of another rally, or is this narrative about to blow up in our faces? Let's get started with the daily market narrative going into 13th August. So, the story that talking heads are pushing is pretty simple. Good inflation numbers, a bit of a US-China trade truce, and bam, the market thinks the Fed's gonna cut rates. This is supposedly fueling this massive rally, pushing the S&P and NASDAQ to new highs, all thanks to those AI darlings. That's the official line, the happy-go-lucky version. They throw in a little disclaimer about tariffs and the economy, but mostly it's about the Fed pivot. Look, I get it. Everyone wants to believe the Fed is going to ride in on a white horse and save the day with rate cuts. And yeah, inflation data might be cooperating, maybe. But this whole narrative hinges on the Fed actually having room to cut rates without reigniting inflation or completely tanking the dollar. We're seeing yields tick up, the dollar is holding steady, and while the big tech names are carrying the market, that's not exactly a sign of broad economic strength. This feels more like a market chasing a phantom Fed cut than a sustainable rally. We're betting the house on a single data point and a narrative that's been wrong before. Let's just say I'm not ready to pop the champagne just yet. The real economy has a way of showing up, and it usually brings a much messier story. All right, let's hit the scoreboard real quick. S&P 500 futures are down 0.10% to 6,462.25. U.S. 10-year yields are up 0.47% to 4.29. The dollar index is down a hair, 0.02%, sitting at 98.08. Gold's up a solid 1.54% to 3,400.60. WTI oil is down 0.11% to 63.10. And Bitcoin up 0.03% to a wild 119,347.33. So that's the scoreboard. Now let's look at the headlines driving these moves. U.S. stocks reach new highs as inflation boosts rate cut bets. Bloomberg.com. Yeah, stocks are up because they think the Fed will cut. It's a self-fulfilling prophecy based on wishful thinking, not a guarantee. This is just another headline confirming the market's obsession with a Fed pivot. S&P 500, NASDAQ both notch record close as inflation report gives Fed green light to cut rates, CNBC. Records? Great. But green light for the Fed to cut? That's a bold claim based on one report. This is the noise that keeps the party going, but it doesn't tell you if the music will keep playing. Stocks rise because people bet on rate cuts. It's all about the anticipation, not the actual event. This is just reinforcing the narrative that inflation is good for stocks, which is a dangerous game. Asian stocks to gain as US CPI fuels Fed cut bets. Bloomberg.com. Now it's global. The US CPI is fueling Fed cut bets, and that's supposed to make Asian stocks pop. It just shows how globally dependent markets are on the Fed's next move. It's a worldwide game of follow the leader, and right now, everyone's looking to Washington. Looking ahead, here's what's on my radar. Tomorrow, August 13th, we have a slew of low-impact housing data from the MBA, mortgage applications, rates, the usual stuff. More importantly, we've got a couple of Fed speakers, Barkin and Goolsbee, giving speeches. Keep an ear on what they're saying, even if it's low impact on paper. Sometimes the most important signals come from the whispers, not the shouts. All right, that's my take. If you got any value, smash that like button and subscribe for more daily no BS market analysis. What do you think? Is this rally sustainable, or are we just riding a Fed-induced illusion? Drop your take in the comments below. As always, this isn't financial advice. See you tomorrow.